One of the most important parts during the currency transactions is the revaluation of currency balances. Now let's look at this process. Access the menu entries and add new transaction on January 1st. Select bank's foreign currency account 1220, debit 100 US dollar. Balance this transaction, select 1410 some organization, and system will show you not only nominal values but also their equivalents as well. US dollar exchange rate on that date was 2.5, so here you see $100 equivalent value, 250 lari. The second equivalent value will be the same as nominal value because we have second registered currency US dollar. Save this transaction and now let's look at currency balances for the time. Let's say for February 1st. Access the menu or results and balances. For the first time, system will show balances and their equivalents in lari, but if you want to get dollar balances, you should change currency, select US dollar, and don't forget to check this box, show equivalents. Okay, and you will be able to see dollar balances. Here you see $100 which has been debited on account 1220 and its equivalent value. Now let's take a look at dynamics of exchange rate. Access the menu, related tables, currency and rates. Add US dollar, a new exchange rate for February 1st, let's say 2.6. Okay, and now move to the menu balances, and here in the equivalent field should be $100 equivalent value, 260 lari, because exchange rate for this date was 2.6, but it can't be done automatically. To do that, you should post special entry which you will appreciate or depreciate equivalent part. In this case, we have to appreciate 250 lari by 10 lari in order to get $100 equivalent value in lari when exchange rate goes up from 2.5 to 2.6. To do that, you should access the menu entries and add transaction of exchange rate differences. Then you have to select account 1220, which you need to appreciate. Don't touch nominal values, change only currency, select US dollar, and also you should cancel exchange rate and check this box here, rate is fixed, and then put 10 lari down here because you have to appreciate this equivalent value by 10 lari. Balance this entry and select account 8290. So you can record transaction of exchange rate appreciation in this way. And if you move to the menu balances and refresh this screen, you will get $100 equivalent value, 260 lari. As you see, it's not a simple process. You should know account to appreciate or depreciate by what amount and so on. In order to simplify the process, there are many macro transactions in the system. In order to look at how the system will cope with the task, let's delete transaction of exchange rate differences which has been set up recently, and access the menu, macro transactions, macros for preparing the balance, and revaluation of balances, and look at the macro revaluation of balances. As the system will open the screen where you can specify as the date when you want revaluation will be done, and also here you see income account and expense account, and system will use one of them depending on the situation. You need only to check account valuation of which you want to be done, 1220 in this case. Click OK, and system will find itself currency balances and exchange rate for the time you want revaluation will be done, and transaction which has been recorded recently by hand will be set up by system. And here you see this account has been appreciated by 10 Larry. And also you can check several accounts and perform a evaluation of them simultaneously. In our case, we have balances in US dollar here on account 1110, so you can check this account and perform its revaluation as well. Now let's go to the menu macro transaction, cancel this transaction, and select this macro again, and check several accounts. You can check them like this, and specifies the date you want evaluation will be done, for example February 1st. Okay, and the system will find those accounts with dollar balances suitable for evaluation and will perform this process. As you see, 2 accounts has been found by system. You know about this first account which has been appreciated by 10 Lari, and this second account has been appreciated by 20 Lari. And if you go back to the menu balances and refresh the screen, you will see that the evaluation of the second account will be done as well. Now let's go to the menu macro transactions again and cancel this transaction, and look at how evaluation will be done according to changes in the exchange rate. In order to do that, let's add new exchange rate. Let's say on January 27, take exchange rate 2.27. Okay, so you have exchange rate 2.5 at first, then it goes down to 2.27, and then goes up to 2.6. So you have to depreciate account balances at first and then to appreciate it. Now let's look at macro transaction. But in this case, you should select another macro of this one, the revaluation of one account balances by changes in the exchange rate. Select period of revaluation, currency US dollar in this case. Let's take this account 1220. Okay. And now our evaluation will be performed on 2 different dates. On January 27, this account has been depreciated by 23 Lari, and on February 1st, it has been appreciated by 33 Lari. There are other macros here in the system. You can use those macros and perform evaluation of balances in second equivalent as well. You can try them yourself.